one as we see some push and pull between earnings winners and losers. Earnings are still the primary driver of what's going on in today's session, although, of course, people also turning their attention to the Fed and to some degree to what's going on in Washington with the healthcare debate. But now the best performer today helped in part by strong performance from Boeing. On the political front, we're also taking a look at the steel makers, a combination of earnings and politics here. In fact, U.S. Steel bouncing back, coming out with earnings that beat analyst estimates after a rough second quarter. The company improving its productivity and efficiency at some of its plants, so those shares are rising. However, the rest of the steel industry is under pressure because of comments from President Trump to the Wall Street Journal saying there has been a delay in these so-called
What's interesting here is you have this other dip intraday. Now, these aren't big, and it's gone smaller than the Comey dip. But the bottom line is that there are market participants that are watching this and they react to this. The only problem is that, given how much we've talked about, obviously what's happening in Washington, because there's so much that's unprecedented in so many ways. What it doesn't really match up with is the volatility. And we've got another chart that is looking at actual political volatility in markets. This is an index that we actually track. And basically, it's looking at the number of instances.
Does not want to go as far as firing him, and part of that could be because yesterday there was a real strong, sign of support from members of the Senate for Sessions. Other conservative pundits, like on talk radio and cable, have been coming to Sessions' support, and Sessions isn't going to quit. He is staying put, and those close to Sessions say that this is his dream job. He is very passionate about the issues that he's going after, like illegal immigration, drug trafficking, rolling back some of the Obama-era police reforms. Those are issues that Sessions has been working towards for his entire career. This is the very moment he's supposed to make a difference, so he's not backing down. Trump doesn't want to go as far as firing him yet, so for the moment we're at a stalemate. It looked like this morning Trump was trying to move on to another topic, bringing up this issue of transgender members of the military, but then a few minutes after that went right back at attacking Sessions and his decision not to remove Andrew McCabe as acting FBI director.
You mentioned how many of his former colleagues from the Senate have rallied around Mr. Sessions. Let's hear from Richard Shelby, another U.S. Senator from the American South. Hear what he had to say about Jeff Sessions a little earlier.
I think he did absolutely the right thing when he recused himself, and when people raised the specter of conflict in the Russian investigation, and obviously that set the president off. But Satan.
This is for the markets, the Trump economy. I'm David Greer. Let's get a check on what markets stand. I promised Whole Foods update from Julie Hyman. Now, Julie, over to you.
Thank you, David. So it's unusual here. Whole Foods are supposed to report its results after the close of trading. Instead, they're coming out now. So as you mentioned, earnings per share coming in at 36 cents, 33 cents was the estimate here. Revenue coming in very slightly above estimates. And comparable store sales down 1.9%. That's a slightly smaller drop than estimated. But it is the 8th straight quarter that the company has seen declining comparable sales. Now, I was just emailing with Craig Giannone, who covers this stock of the company at the next two meetings, and then that kicks up to 45% by the December meeting. Still, not much change is predicted, so we're going to be looking for any details on the balance sheet and, of course, the future pace of rate increases. And then finally, if you take a look at #BTV7207, the Fed funds rate here, as well as core PCE, the Fed's preferred measure of inflation. And it's unusual. Live from Bloomberg's World Headquarters in Midtown Manhattan, this is The Fed Decides. I'm Scarlett Fu, and for the next hour, we'll be bringing you special live coverage of the Federal Reserve statement just 5 minutes away. Here's what we have coming up. It is decision day at the Fed, no change in interest rates expected, and there's no press conference either. The key issue for Fed watchers, a start date for the balance sheet unwind. In all-star lineup this hour, we've got BlackRock's Jeff Rosenberg and GS Economics Diane Swan kicking things off. And later in the hour, Bill Gross of Janet Henderson and former Fed Vice Chair Alan Blinder. And keeping an eye on Washington, Press Secretary Sarah Sanders will be hosting an on-camera White House press briefing.
I can't round it up to 22,000 yet. Not their yields are in 2 basis points. That should be red on the screen. And that 2 basis points, again, 112 at Brent crude, of course, and 51 is a nice size as well. Who do we have to speak to today? You mentioned Bill Gross and Alan Blinder later in our hour. Jeffrey Rosenberg is with BlackRock, the chief income strategist. A lot to talk about. To Jeff Rosenberg, this mixture here within fixed income, within equities, and of course, as you bring it over to Fed policy. And we are thrilled to bring you today from Hearst, Chicago, where they're trading White Sox for Cubs and Cubs for White Sox. Diane Swan with us with a really original view of the Midwest, and of course that is a Midwest that the president is focused on. Diane, from where do you sit? Does President Trump, as we go into this Fed meeting, does he understand Midwest labor and Midwest economics?
Boy, that's a big question and an awfully loaded one. I can't certainly say I can get into the president's mind. I do think what's important is we're starting to see the auto industry is actually laying off now instead of hiring. That's not something he was certainly hoping for. And the steel industry is still struggling. On the flip side of it, what you're seeing is that whole move from bricks to clicks. I just did a big show, a big interview on the move with Amazon warehousing sites and how they're moving into rural America. They're really setting up jobs and creating jobs in areas where there weren't, but they're rural areas that are tied to urban cores. So right around the periphery of Chicago, you can see a lot of them.
I wanted you to get to Jeff Rosenberg, but I think labor is a backdrop here. Nobody's talking about in this Fed meeting.
Labor is definitely the backdrop here. Jeff, we have a minute to go before the statement comes out. Very quickly, are we going to get some kind of starting date for the balance sheet unwind today?
We're not going to get that. What we might get is just a little bit of a hint, either in the next few meetings or relatively soon. The market will be focused on the language evolution for the balance sheet. A lot of expectations that you're going to have that. The market's focus is that you'll get the announcement in September, so this meeting is setting up for that with some kind of language tweak around that balance sheet.
What about a language tweak on inflation?
Well, so then on the economic update, there's 3 areas. Labor markets get upgraded, growth is relatively flat, and there's going to be some kind of acknowledgement of the weakening inflation. Markets are going to focus on that.
Go back to this chart right now. Go back to the pitch chart. We just had the pitch plunge here. I've never seen this, folks. As we go into a boring Fed meeting, it's not boring. In front of that is the VIX down to 8.91 on the VIX. Scarlett?
All right, let's head over to Mike McKee at the Fed. Mike?
No change in policy, concern about inflation, and that hint about the balance sheet that Jeff was looking for. The committee expects to begin implementing its balance sheet normalization program relatively soon, the statement says, providing that the economy evolves broadly as anticipated. The Wall Street consensus going in, of course, was that would mean a September announcement. The benchmark rate stays in the range of 1 to 1.25%, but in what will be interpreted dovishly, policymakers dropped their reference to inflation running somewhat below. its 2% target. The statement now says that overall and core inflation have declined and are running below 2%. The forecast language, though, hasn't changed. Inflation is expected to remain somewhat below 2% in the near term, but it will, according to the statement, stabilize around the committee's 2% objective over the medium term. Other slight tweaks: the labor market has continued to strengthen, the statement says, but acknowledging June's